Welcome back to the Passive Road to Retirement podcast. I'm your host, Andrew Jarrett. Today, we're joined by Larry Hoffman. He's the owner of LJH Investments, an Ohio-based real estate investment firm specializing in buying and selling distressed and toxic assets since 2006. His company focuses primarily on the purchase of performing and non-performing first mortgages on residential and commercial properties across the United States in the 50 largest metroplexes. His strategy is to purchase this mortgage debt and either negotiate with the homeowner or borrow to take control of the property, or turn the loan back into a performing loan. Instead of rehabbing the property, his focus is to rehab the borrower and create a win-win scenario for our borrowers, the banks, and the investors. Larry, welcome to the show.
Hey, Andrew, thanks for having me on. I really appreciate it.
Yeah, it's a pleasure to have you here. So how did you, originally, get into real estate and then into the note business?
Well, I started back in 1996. I actually, I bought the Carlton Sheets course. I don't know if you're remember Carlton Sheets.
I had that. Yep.
Okay. All right. So I think a majority of the people got started that way, or maybe, a different, but for me, it was the Carlton Sheets course. So I've actually bought that in 93, sorry. And then I didn't actually implement anything until 96, 98. And then I eventually formed my company in 2006. So, but that was the catalyst starting the ball rolling.
Nice. Now you did fix and flip originally, right?
Yeah. I was typically I was doing probably between at the time 3 to 5 houses. I was buying 3 to 5 houses a month, and then in my heyday, I was buying between 5 to 8 houses a month. And so I would have. I started out, like I said, slow, and then I eventually got up to that 8th, 9th property, and then I was just using bank financing, and then I had a really good relationship with the president of a local savings and loan. And I got to, I think it was around the 8th or the 10th loan. I forget which one it was. And the bank, the president just says, no, we can't give you any more loan.
Yep.
And because you're like too leveraged, and I'm thinking, wait a minute, how can I be too? But in the bank's mind, right? So that's when I started looking at private money, and then that's when I really grew the business.
Nice. Yeah, private money is a great thing. I use that still to this day all the time.
Yep, 100%.
Either through smaller deals or for raising for a syndication.
Yep.
It's all OPM.
Yeah, exactly. And that's what I'm in the process of doing right now. I'm actually doing a syndication, a fund. And so that way I could take down larger pools of notes. Nice.
All right, cool. Now you did some landlording as well, right?
I did. And I 100% did not like that. And it's just, as we were kind of talking about before the podcast, before the start of the show, that's why I made the transition from landlord. Now I'm a lien lord, and I do not do the tenants, the toilets, or the trash outs at all. I'm strictly the bank. I just actually sold my last rental. God, when was it? I think it was back in May of this year. And it was I had a Section 8 tenant in there. And so I actually sold that. And I actually bought, from the proceeds, I actually bought 6 performing notes from that.
Nice. Okay.
Yeah. So I'm getting a pretty good return on my money on that one.
Yeah, that's great. I guess for people who don't know, how does note buying work? Like, what do you typically look at, and what kind of returns can someone expect on that?
Yeah. Well, there's basically like 2 aspects when it comes to note buying. You can buy the performing notes, where the borrower is making their monthly obligations like clockwork, and then you could buy non-performing notes where the borrower isn't making any payments. They're either 3, 6 months behind or 15 years behind. I'm actually looking at a pool right now, buying a pool of 100, where they are. I think the last payment on one of them was like 2005, 2008. So you have to look at the statute of limitations when it comes to that, when you can collect it. But yeah, so you can when you typically buy those notes, the performing note, you're usually paying kind of close to par, which means par is their asking price. So if they're looking, if the note has about a 9 and 10% return, you're looking at paying between a 9 and 10% return. That's why I don't typically buy a lot of performing notes, just because that ROI is a little bit lower. I typically like 15% or greater on those performing notes. And then when it comes to the non-performing notes, I mean, you're looking anywhere between 18 to about a 30% return or greater. I'm just talking, like, when I'm saying 18 to 30%, I'm strictly talking about the yield to maturity on that note. But if you have to foreclose on that property, then your yield shoots up, exponentially. Or if you don't do your due diligence with it, your yield dramatically tanks, goes the other way. So you really have to do your due diligence before buying these things.
Hey, everyone. Hope you're enjoying this episode. Are you ready to maximize your real estate investing to its full potential? Send an email to andrew@jarrettcapital.com and take your life and business to all new levels. That's andrew@JARRETT capital.com. Have you ever had any, where I'm sure you have, where you couldn't collect, or any, any war stories you want to share?
Yeah. So far, knock on wood, I have really been fortunate with, but my model is when I buy these non-performing notes, foreclosure is the very last thing that I want to do. Okay. So I will literally bend over backwards to work with the borrower. I mean, I bought one last year where we just wrapped up the trial payment plan, and now it's a performing note, and I converted it from a contract for deed to a mortgage. So that makes that note more valuable if I go to sell it. I do have private money on that. So I'm torn because I've struck up a really good relationship with this borrower about selling it or keeping it. I think I'm just going to pay my private investor off, and I think I'm just going to keep it just because of the relationship that I have with it. But I purchased bankruptcies, notes that are in bankruptcy, Chapter 7, Chapter 13, and ultimately, what I try to do is I look at their finances and I try to structure a deal around their finances. So that way, because they have to be totally upfront and honest with everything that they're doing. Sure. So I look at everything and I evaluate the debt to income ratio and then have a conversation, reach out to the attorney, start that ball rolling, and then ultimately reaching out to the borrower and just basically sitting down to see if we can get on the same page. I mean, I just did one where the payment was something, I think it was like $540 a month. I did a loan mod for $350 a month.
Okay.
So, my thing, like I said, is ultimately I don't want to set them up for failure. I want them to stay in that property. I want them to continue to make these payments on that house. I do not want to foreclose on it. But you do have other note investors where that is and there's nothing wrong with it, right? If that's your business model, where they want to take that property back and either fix it up and sell it or add it to their rental portfolio. That's not mine.
Yeah. You're just looking for that passive income stream.
Exactly.
Yeah.
Exactly.
Okay. Makes sense. Now, where do you go to find these notes?
Well, I have different sources. Excuse me. I have a really good relationship with a big bank that they typically send me a lot of commercial deals. I haven't been able to take anything down through the commercial just because of the numbers were so far off from what they're wanting and what I want to pay. Yeah. But then I also have relationships with other bank managers, local banks, asset managers, other hedge funds, and then also other real estate investors that are looking to sell their notes. I mean, it's funny, I post on Facebook quite a bit on either myself or I have my VA do it for me, where it's just talking about owner finance notes. If they've taken back an owner finance note, seller financing, I'd be interested in making an offer on that note. But so those are just some of the places that I typically find deals at.
Okay, interesting. So I guess, when you get one, their contact information probably comes with it, but I guess, what are your steps? Like, if you can't get a hold of them, how does it work? Like, what's your system, I guess, once you get one of these?
Yeah, usually when they say, for example, when you have a couple different ways, right? If it's just one note, then the investor will just send you that asset, that information regarding that property. And when I say the information, it's usually they have like depending on how, if they've used a residential mortgage loan originator to originate the loan, then
Hmm.
typically they'll have like an appraisal or something, like title, and then you have the loan terms, and then either you have the contract for deed or the mortgage. So they'll send all that stuff over to me, and then I'll have the borrower's information along with it, and then before they do that, I'll sign a non-disclosure agreement with the seller, stating that I'm not going to, try to go around his. I mean, I couldn't go around his back anyway. But you do have people that broker the deals, and try to sell this thing, and I strictly buy for my own portfolio. So I'll just evaluate the note, and then if the numbers shake out with the yields that I'm looking. So if I'm looking to buy it either in my IRA, my self-directed IRA, it's one set of numbers. My yield can be a little bit lower, as opposed to if I'm using private money, then my yield has to be a little bit greater.
Hmm.
And then I try to evaluate selling this thing 2, 3, and 5 years from now. And I'm trying to find that sweet spot to know how long I keep this thing out for and not have to worry about it. And then not having that principal payment paying down so rapidly, decreasing that unpaid principal balance, where I'm going to have to come out of pocket for my investors,
Right.
right?
Yeah.
So once I evaluate all that, and then if they come back and they say, Larry, the numbers look good, or we go back and forth, right?
Hmm.
And then once we finally finalize on on an agreed price, then I'll just go ahead and order a BPO. I'll do a title search, um, check taxes, look at utilities, make sure there aren't any liens on the property. I'll actually do a look at the crime stats and stuff like that to make sure that I'm not getting into something that's not good for my investor or me.
Sure. Yeah, that makes sense.
Yeah.
Okay. Now, when you're looking now, just curious, do you see any certain niche of real estate that is having more defaults right now than other ones?
No, it's surprising. There's more people. I forget what was it. I think Adam Data. I think it was like I think they said it was like now I can't remember these stats. It was either like 97 or 98%, and in a fraction of people are current on their mortgages. So there's like roughly between 2 and 3%, like a 3% default rate
Hmm.
right now. So there are a lot of performing notes out there in the space.
Yeah, that's good. Yeah, because they have a lot of low interest rates right now. I'm
Right.
sure
Oh, and
people don't want to
yeah.
get
Oh,
rid of.
100%. And that's the thing, because that it's so low. A lot of these. I mean, I was just reading an article that U.S. Bank. I believe U.S. Bank is laying off a bunch of people.
Hmm.
And then the National Mortgage News, they were talking about the pros and cons of the low interest rate, just because it's I mean if you get locked in at a 2 point something percent, now it's 6 point something 7 point,
Yeah.
you're like you're literally 3 times the amount.
Hmm. Yep.
I'm like, there's no way people are going to refinance that
Right.
unless they 100% have to or need to.
Yeah. Now, a loan like that at like 2.8%, is that even something you'd consider? Probably not, right? Like,
I
oh
do,
yeah.
but see, with that, the seller will have to take a substantial haircut, because, they're looking at two, and if I'm buying it in my IRA, say I can go down to about if I'm looking at I mean, like a 10 or even 11, 12% return, there's a big difference between the two. So they're going
Yeah.
to have to take a substantial discount on that. And, when it's that low, people just tend to hold on to them.
Okay. All right. Looking back, to 2004, five, when you were doing those fix and flips and the rentals, knowing what you know now, would you suggest that somebody still starts that way, or you think people should consider just going right into notes? Or, what are your thoughts on that?
Well, that's a good question. And that's the thing. I think that's kind of like a subjective question, because each person is a little bit different.
Mhm.
I have no regrets with starting rehabbing it, because I've done single family homes all the way up to multifamily homes, and condos, mobile homes. I bought land. I own a couple land notes right now. But the thing is, it's banks are in the business of loaning money, not owning the real estate, right? So
Right.
that's in my eyes, that's where the real wealth is. That's
Mm.
where the real power is. But I think looking back on it now, with the experience that I have, I would 100% gotten into the note space early on. It was funny because I remember when I first got into it, I sold a house and I offered owner financing, and I took back a second, and I didn't really understand the whole thing. But then I tried to sell this second on the secondary market, and just a haircut that, I mean, it was literally pennies on the dollar. And
Yeah.
if I would understand, now, then, but what I know now, right, I could have 100% structured that deal a completely different way and capitalize on a huge part of that payment, or that outstanding balance selling it.
Hmm. Yeah. Yeah, I can imagine, especially as a second, you probably take a bigger haircut than a first position lien.
Oh yeah, yep, for
Yeah.
sure.
Hmm. Okay.
And that's the thing. I only buy first position notes. I don't do
Yeah.
seconds. And I do have colleagues that people that I know, other note investors. They do that. They just strictly buy seconds. They don't do first.
Really? Wow.
Yep.
Yeah, it seems a little risky to me, buying a second. But
See, and that me too. But that's just that's their risk tolerance,
mhm.
theirs versus mine, right? And
Right.
so there's a lot of I know that they have a lot of criteria that has to be met when they buy a second.
Hmm.
And so there still has to be, an outstanding amount of equity before they even consider it.
Sure. Yeah. In case they have to foreclose, I'm sure.
Yep.
Okay. I guess what would be your, looking at notes, some top strategy for someone to create that first stream of passive income? How could they go about and do that?
Well, an easy way to do it. There's a really good way. Let me back up. In order to really take this to the next level, you 100% have to develop relationships with bank managers, hedge fund managers, asset managers,
Hmm.
and bankers and other note investors. But if somebody's just 100% interested in just jumping into this right now, there's a website. It's called PaperStack, PaperStac.com, that you can go to right now, and it's a really good website. And there's a couple other ones out there, but I've purchased a couple off of PaperStack, and you
Okay.
can go there right now, and you can see a list of all the performing, non-performing first, second, and I think they have thirds as well. And you can differentiate between contract for deeds and mortgages, and also you can filter out on the states that you want to buy in,
Hmm.
and the states that you don't want to buy in. So you can 100% go over there right now, sign up for an account, and then start evaluating the yield to maturity on the yield that you're looking to that you want to earn,
Hmm.
and then you can just make these offers on these assets. Really good
Wow.
website.
That's
Yeah.
interesting. Yeah. I haven't heard of that before. Wow. Okay. Do you have any daily habits that you do to kind of like keep you in the mode for success and keep you motivated?
Yeah, I do. I get well. My thing is I get up every morning and I exercise. I'm up pretty early,
Mhm.
and I either do this. I do the beach body cardio insanity, or I run about 4 days a week. I run between 4 to 6 miles, 6 to 8 miles, depending on how I feel.
Oh, wow.
And then when I get back, that just kind of jump starts me. Um, and then I'll start getting onto LinkedIn, and I'll reach out to asset managers, bank managers, other note investors, just to touch base with them, let them know that, hey, I'm buying notes. If you're looking to sell, there's other Facebook groups that either myself or I have my VA post in.
Hmm.
I'm constantly posting articles and case studies on things that I do, either on LinkedIn, or I'm sorry, both on LinkedIn and also Facebook. And then I also post that same information up to my YouTube channel as well.
Okay. What's your YouTube channel, by the way?
I believe it's called Larry Buys Notes, like at Larry Buys Notes.
Okay. And you do
Yeah.
what kinds of, is it like educational on there, or what
Yeah.
kind of videos do you have on there?
Yeah. And that's exactly what I'm trying to do. And then I also, I took over this meetup group. It's the Real Estate Social Network.
Okay.
And what happened was the name came up for sale, not the real estate. It was another name, and this group came up, and so I just figured, well, I'm just going to go ahead and buy it, and just because there wasn't a lot of activity over there, because my main goal in taking it is basically, and the same thing with the YouTube video is to foster a place where it's really about learning, and that I don't have anything to pitch. I'm not I'm not selling a mentoring course. I'm not selling a coaching program or any other like course or anything. I'm just
Mhm.
what I'm trying to do. It's kind of, I guess it's self-serving is also, I want to develop foster a place where people can trust one another, but also a place where I can do business with other people that I can trust.
Sure.
Right. And then if you train somebody on how to create a note and how to sell a note, then you can trust that person because you've already had this relationship with them. And I'm not saying
Mhm.
that everybody's out to get you,
Right.
but you just 100% have to do your due diligence with this. But it's with the YouTube video and that meetup group. It's just trying to primarily do foster teaching and also connections, networking.
Yeah, that's a great idea. You can kind of create your own little marketplace essentially,
Yeah.
right? To buy and trade there.
Well, and that's the thing is, I polled everybody, and I had a few people. It was just it was inactive for a long time, so I had several people call or reach back out to me. So my first thing was on like note investing, and then I'm going to have a couple of the vendors on that I personally use, and then I also want to have different topics like subject to deals, lease options, just not like notes, but if somebody has a different thing that they want to learn, or maybe they have a special niche that they're doing and they want to share it. I mean, I'm all for it.
Yeah. No, I like it. That's great. Is there anything in the note business overall that you'd like to debunk?
Um, you know what? When you say debunk, what do you like? How do you
Like
think?
any myth out there that people always say, but it's not really true? Anything like that?
Um, no, well, I mean, I think it just goes in general with real estate investing. I think people think that this is a get rich quick
Yeah.
scheme, and it's not.
Right.
You really have to put your time and your energy into doing it. It's just like anything, if you don't do your due diligence on it, know what you're trying to buy it for going into it, you will 100% get burnt in this.
Yeah. Hmm.
But my big thing is this is 100% not a get rich quick scheme.
Right.
This is I look at it as a long game,
Hmm.
and it's just you build passive investment like one note or one property at a time, and then after you have you know 10 notes, 20 notes, 10 properties, 20 properties, that starts to add up over time, and
Right.
then you're kind of like, this is a nice little chunk of income coming in each month.
Yeah. Hmm. Yep. Get rich slowly over time instead of quick.
Exactly.
Hmm.
Exactly.
Yep. And it'll just get you out of your W-2 or, and you can get financial freedom, either
Yep,
way,
100%.
which is a
Exactly.
key for a lot of people.
Yep, 100%.
Yep. Now, before we get into our last question, what's the best way for someone to reach out and contact you?
They can reach me. Let's see, they can go to my website, ljhinvestments.com, or they can just schedule a 30-minute call with me at this website link. It's talkwithlarryhoffman.com. And, if they have any questions about like the notes or the real estate, or, I mean, even like private funding, I mean, they can just set up a 30-minute call, and I'm pretty much an open book when it comes to this stuff.
Okay, awesome. We'll put the link in the notes as well, so you can click on that.
Awesome.
And then last question, before we get to our 5 to Thrive, if you could step in my shoes for the interview, what's one question you would ask yourself that I did not ask you?
Ooh, that's a very good question. Wow, let me think. One question that if I can go into your shoes, I think I I think the one thing is maybe how do you use private money to take
Mhm.
down these deals,
Yep.
right? And
Mhm.
so Would you like me to answer that or?
Yeah, that'd be great.
Oh,
Yeah, that's a
okay.
good question. Yeah.
Okay. And that's the thing, because you're regardless whether you're buying notes or you're buying real estate, you will come to a point in time where you're going to be tapped out, and you can't buy anything, or the bank's not going to give you, like the conventional bank's not going to give you anything.
Mhm.
The big thing for me is just going to your, well, there's a couple things. You can go to your local REIA, meet with other real estate investors and talk to them and tell them what you're doing, and strike up a relationship. The big thing is, well, I can give you three. The second thing is drive around your local neighborhood, see who's actually rehabbing the properties, write those addresses down, go to your auditor site, look to see who owns it, go to your recorder site and see who actually lent money on that. And
Mhm.
then if you skip trace them or send them a letter that, hey, I noticed you sent you funded this deal on 1234 Main Street. I'm also a real estate investor. If you would be interested in grabbing a cup of coffee, it's on me, or lunch. I would love to bend your ear a bit on a couple of deals that I've have going on, and see if you'd be interested in funding an above average return on your money. The third thing is real easy. You can go right now. You can go to your auditor site. Everybody, I would say not everybody, but a vast majority of the counties out there, you can go on your auditor site and go in and look for self-directed IRA holders, third-party
Mhm.
IRAs
Yep.
like Quest or Equity Trust, and download that list and just sift and sort those columns. And 8 times out of 10, you'll get the mailing address, and then you can send them a letter directly.
Yeah.
Basically the same thing. Like, hey, I saw that you lent money on 1234 Main Street out of your self-directed funds, and just kind of talk a little bit about what you're doing and see if you'd be interested in just grabbing dinner or lunch, or even like a drink. It's on me.
Mhm.
No pressure. If you're interested, please feel to reach out to me. But that, I'm telling you, that's those three little things. The big thing, that's how I found a lot of my private money early on, was I was driving to neighborhoods when I was rehabbing these
Okay.
homes, because I was looking to see what other investors were doing. And then I would look up the information, and then I would 100% send them a letter and
That's a
just
great
strike
idea.
up that
Yeah.
relationship.
I tell people that last one too. I mean, that it works great.
Yeah.
People are very open to it. So it's a
Oh,
great way to get
100%. And
private money.
that's the thing. You think people would be standoffish.
Mm-mm.
Everything for that is furthest from the truth.
Yep.
They want an above average return on their money. They're savvy.
Yep.
They want to make money, and they have this money just sitting in that self-directed IRA doing
Hmm.
absolutely nothing.
Exactly. And it's secured by real estate. So
Yep.
even
And
better.
that's the best part.
Yeah, exactly. All right, cool. So we'll get into our five to thrive. So this is word association game. I'm just going to rattle off 5 words and just give me the first word or phrase that comes to mind. The only thing is you can't repeat your answer.
Okay.
All right, here we go. First one, private mortgage.
Ooh, man. First word for private mortgage. I would say, God, I don't know. I'm trying to think. Private mortgage. So if I'm thinking of the word or phrase private mortgage, I'm just thinking no, I would say a motivated seller.
Mhm. First versus second position, lean.
First position, secured, more secured than what the second is.
Yep. Owner financing.
I would say, oh, I'd used motivated before. So let's see, owner financing. What would be a good word or phrase? I was going to say motivated, but owner financing, I would say you can dictate the terms. You can give
Yes.
them their asking price, but you dictate the terms.
Yep. Price or terms, right?
Yep. Yeah, it's like a teeter totter, man.
Yeah.
You can't, what
Exactly.
you got. If you want to play, you want the price. I'll give you the term. You have to give me my terms.
That's right. Exactly. Cash flow.
Retirement.
Mhm. And Larry Hoffman.
Always trying to do the right thing when nobody's watching.
I like it. Awesome.
Yep.
Well, hey, Larry, appreciate you coming on. It was been a great interview and appreciate taking the time to come on the show.
Oh, thanks, Andrew. I really appreciate it. I had fun. Thank you so much.
Same.